feel like I'm losing my mind. Is everybody in the world blind? Please, Lord, give me a sign, a sign.
I wanna be the greatest. Everybody on the fake shit. I look around and feel like everybody is the fakest. I make this every day and I'm impatient, hoping one day I blow up from the basement.
Como estas, everybody? What's up? Happy Thursday. My name is Mark, and this is my co-host
Mo from OTB Clubhouse.
And you are watching the Mark and Mo Show. So get ready. Make sure you look at the banners above and below you. Okay, that's where you can find us. You can find me on YouTube at Half Breed Observer, as well as on Culture Currency. Those are two separate, different YouTube channels. Mo, where can they find you?
Now you can find me on OTB Clubhouse on Instagram.
Yes. How you like Instagram, by the way?
I think we had a conversation. I think I want to get off Instagram and go on YouTube. So I committed that starting this Sunday, my watch list meeting, which is behind a paywall, I'll open it for everyone. And I'm going to try one episode, see how it goes. And if it goes good, I'll just keep it open for everyone moving forward every Sunday.
Good, man. You should. I think you will benefit a lot from YouTube. Instagram, I used to love it. I actually deleted my, I guess, professional page, the Dope Content Creator. I deleted it several days ago. Don't regret it. I just got tired with all the spoofing of my account. And I don't know why people would spoof an account. A person only has like 2,000 followers, but they would constantly spoof it. A lot of fake followers consistently. It just wasn't beneficial to me anymore. And I noticed that every time I put a link up, and a lot of people aren't clicking on it anyway. So I just got rid of it. I do have Instagram, but it's a private one. You will not be able to find me. So if anyone ever wants to get in touch with me, just go on my YouTube channel and comment below. I always check those at least once or twice a day. All right.
I like Instagram in terms of just like keeping up with like what's going on, like for my business, like for people, it's like a snapshot of how my business is doing. Mm-hmm. But for teaching, it's useless because I'm talking about charts and I feel so bad that people can't see the charts, and that's not my intention. I want to show, but then I have to flip the phone, like going, and you could see my reflection. It's not professional. It's kind of annoying. So I'm like, I'll just do it on YouTube, and then people get what I'm trying to show them, which is why I love the podcast, because I could just show you the chart. And people could just, if you're listening to it on audio, you can just go home later and just go to that vid part and then do the chart. So it is available if people want to go look at it.
Yeah, I know some people can like double stream on Instagram, TikTok, Twitch, as well as YouTube. There's some programs I could show you how to do it. And if you're interested in going that way, I just personally like YouTube. But remember, you're going to always be a slave to the system and the algo. Unfortunately, that's part of the process.
Yeah, I've never cared about it. Like, I've had like 3 years ago, it was just when I started, it was just me and maybe one or two people would show up. It's never been about that.
Yeah, that is true. All right, y'all, listen, last week we were talking about getting certificates in trade schools or some sort of skill to utilize to progress your career. Remember that, Mo? And we did a poll. It looked like a lot of people believe that certificates could help you. Well, I got some good news for y'all, and I want to share this real quick. So everyone who showed up early, the 63 people, congratulations. You're going to get some real value here for a second. But I'm going to play this video first and pull it up on YouTube. And it's 40 seconds. Just hang with me. Pay attention. It's a cert that I'm going to be able to help you get for free.
Do you have the passion and drive for a career that opens up opportunities around the world? See yourself in cybersecurity. Right now, for a limited time, you can get certified in cybersecurity absolutely free. ISC Squared is giving away free entry-level training and an exam to the first 1 million people who register. It's part of our pledge to introduce a broader range of candidates to the field. Start your career with a certified advantage.
All right. So you would think we'd get sponsored by these people. So you can get a free certificate in a cybersecurity. It's entry-level certificate. I'm going to put the link here. Let me show you guys this real quick as well. Wrong one. Let me remove it completely. Pull it up here. But again, this is for anybody who's maybe interested in getting their foot in the door, especially in cybersecurity as the entry level. I'm going to post it here, the link in the chat. And that way you guys can sign up for it. It's 100% free. Once you pass, they're going to pay for the exam. It's the first million people that will sign up. So yes, they're trying to get people to get the certificate. It will help folks get into the cybersecurity business, most likely help desk. Once you complete the certificate, their training is self-paced, so it's whenever you can complete it. They will also pay for the exam, and once you pass, you pay a $50 annual maintenance fee, and that's pretty much it. So let me go drop this down here real quick. Yes, you can get a job if you even go on Indeed and etc. There are some jobs that are now kind of requiring this as an entry level to get into cybersecurity. So just check it out. Go look on Indeed.com, do some Google searches, do your own due diligence, look into it. But in the end of the day, it's pretty much free. You could add it onto your certificate, especially if you're interested in getting into the IT space. So I posted it here in the link. Oh, nope, that's the wrong one. Give me 1 second. Let me delete that. How do you delete this? Banned from YouTube? Nope, can't do that. I don't know how do you delete the comment. Anyways, wrong one. Let me post the right one.
Do you want to delete that comment? Yeah, I got it.
Yeah, can you delete that? Thank you.
It won't let me delete it because
it won't let me delete it anywhere either.
Because you're the admin.
Yeah, here you go. I just posted it and I started it, so it should show up at the top. So ignore the first one. Let me see if I could delete it here remotely. And yes, I did. I was able to delete it. Perfect. So that link right there, you guys can sign up for completely free and get yourself a certificate to get yourself in the door. I told my 16-year-old son to go ahead and take this. It could help him for summer jobs and etc. So check it out. All right, Mo. Are you guys ready for the show?
Let's do this.
All right, we're going to hit the entertainment part first.
Trigger warning. The following content may contain opinions, thoughts, and subject matter that could be sensitive or triggering for some individuals. Viewer discretion is advised.
All right, let's talk about the Apple event. I think Lawrence covered it on Monday. I think Mark covered it on Tuesday. Let's talk about it. Mo, did you watch the iPhone 15 event?
Yeah, I look for keywords, so I'm looking to see if it's going to dump or rep, which it always dumps, so it's like no brainer there. But my favorite part was them going with the universal charger, because it is a headache. Like, it is a headache finding these chargers, buying them from Apple Store for like $70. It's crazy. I'm glad they're doing that.
It's just funny to me how exciting people got over a USB-C charger, which again, all the other phones already had. Most of their own devices already had USB-C capability, but this was the event. My biggest question is this. Should iPhone be valued at a $3 trillion company? Should be valued at that price at this point? Do you think they're starting to lose steam? The sales are going down somewhat.
Yeah, their sale, I was reading it. It's down 2% year over year for iPhone sales. It's unusual. Basically, what that means is people aren't upgrading, and I don't blame people. I used to work in this industry for 4 years. There was a time it used to be launched once a year. Now it feels like every month there's a new iPhone, and people got better things to do. And if you have the Max Pro, that's like $2,500. It's insane. But no, man, Apple is a premium service, like product. Like, I see why people get it.
That's the thing, and it's funny because it's a premium service here in the United States only. Again, when I traveled throughout the world and living in Europe, the iPhone is not the primary phone. I think you and I were talking about this before, because you and I communicate through WhatsApp because you live in another country. I communicate with all my friends and family back in Europe. WhatsApp. It seems like WhatsApp seems to be the standard throughout the world, except the United States. Yeah. The United States, somehow Apple has convinced the population that it's a premium status symbol product, and they're doing very, very good at this marketing, because the fact that they had almost an hour, I think it was an hour and a half, maybe, I think it was about an hour and a half event, where 80% of it was them talking about how they're going to be carbon neutral, net zero by 2025, I think it was. Literally, it was like constantly hyping up that they're eco-friendly, blah, blah, blah. And they had even a skit with Octavia Spencer, amazing actress, by the way, shout out to her. And she played Mother Earth and stuff. And it's just, I thought it was funny, but it's cringe at the same time, because you could tell they're running out of ideas to spend so much time to re-emphasize that they are trying to be eco-friendly, yet they get their stuff built in India and China. So it's kind of contradicting. It's just crazy to me how they have such a huge stronghold out here, and they do a great job with the products, right? It all seamlessly works. I have all Apple, but when it comes to innovation, me personally, when it comes to the phone, do you even have you have an iPhone, right, Mo?
You know why I bought an iPhone?
Why?
You remember back when Clubhouse launched? You can
Oh,
only
yes.
use an iPhone. I actually had an Android, and I had an Android because I used to travel to states in India, so I needed something with 3 SIM cards.
Oh, and then you drank the Kool-Aid for the clubhouse that lasted. What was this? It was cool for 3 months, I think.
Not even by the time I got it, it was like just a bunch of weirdos on the conversation, and it got really weird, and then it got just obsolete maybe 3 weeks into it. But yeah.
So everyone in the chat, if you have an iPhone, put a 1. If you have any other sort of device, put a 2. What I'm starting to realize here, because people were shocked that I even switched to Apple to begin with. I think it was about 4 years ago is when I switched because I was a hardcore Android guy. I think when it comes to wanting to be creative and customize your stuff, Android's the way to go. They typically always innovate first. Apple waits, watches, sees what picks up, and they refine it and they deliver it, and it just works perfectly. So it was just, I just don't understand. I don't know how much more Apple can sustain and stuff. I know they're coming out with the Vision goggles. I look forward to that. See if what the sales are going to be. I mean, it's expensive as hell. What, 3,000, 3,500? I think they're going for. And if you look in the chat, it looks like, yeah, see a lot of, it's kind of a mix, but mostly iPhone. People just, they love the iPhones, man. And it just, they work. The ecosystem is really what got a lot of people from the service side of things with the, music, with their Apple TV, with their newsstand, all that stuff is just integrated so seamlessly. That's why it did so well. But the reason why I also want to bring up the iPhone event, because we spoke about this, the last iPhone event, what to expect during these events, right? When it gets announced, the stock gets pumped up, and then during the day of, it usually sells off, and it did the same thing again. Did you take advantage of it?
Yeah, I got into a scalp. I'm not gonna lie, I haven't been comfortable trading this week at all. Maybe taking three trades this entire week. This is a quad witching week. I don't personally like trading this week unless I see a big opportunity. I usually never do. Like tomorrow should be massive, but next week is what I'll be much active. But don't worry, I got play to give you guys today. I got in, so we'll go over that.
Ooh, look at you, Mo. Look at you throwing some stuff out there. But yeah. All right. Well, the biggest question here is who's going to buy the iPhone 15 Pro revised 15 or whatever you want to call it? Because it's essentially the same phone from last year with some tweaks with a USB-C. To me, it was a joke. Maybe they should stop releasing a new phone every year and maybe just do it like every 2 years or so. I know I bought the 14 Pro. I'm probably not going to upgrade to the 15, but they do have some pretty enticing deals where they would give you like $1,000 trade-in, and if the phone only costs $11.99, $200 out of pocket, that's not bad to upgrade to the latest thing. I kind of like that idea. But who's going to buy the new iPhone? Drop it in the chat. Are you going to buy one, Mo?
No, man. I got mine. I think I have the one 14. This is the 14 Max Pro. That's what I have.
Okay, so you're sticking to your guns. You're not going to upgrade?
Yeah, it's too much work. Back in the
Too much work. Don't do it. All right. I'm done. That's it. That's my BS talk. Let's switch over to you, Mo. Boy.
All right, let's get started. Before I talk about this, let me quickly give you guys an intro what this is. So I've been trading for about 3 years, and what I'm going to go over applies for mostly swing trading. I've used this method for the last, I'd say, 5 months, and there's a channel that I have on my Discord called Play of the Week, and I do one ticker per week. Some weeks I can't do it because I can't find anything. And out of I'd say about 22, 23 trades called out, or 20, let's just keep it simple. 19 have worked, one hasn't. The one that didn't work was Boeing, and it didn't work because one news came out, kicked me out, and then the next day it was back up. So if I held it long enough, it would have been up like 300, 400%. You guys took a trade from me called Vale, V-A-L-E. That was play of the week. That was also from the A+ setup guide. Then you guys took a trade for CLS. That was also from here. Now, the success rate is really high. So why do most people not follow it? You need a lot of patience. So when I call this trade out or when I'm doing it, I'm basically going through 30 to 40 trades scanning it, and then if I find something that fits the system, that's when I call it. What I'm going to go over today with you guys, this is a paid workshop. People have paid close to $2,000 to attend this. There's more, but this is a paid workshop that I'm going to just do it because I know there's a lot of people that need it. That's all the reason. There's no me asking you for money. We're going to do this presentation, the workshop. Make sure you guys are taking notes. After this, when Mark posts this YouTube video, there is going to be a link. When you click on it, I'm also making an e-guide. You're going to click on it. You're going to get a text version of it with more details. You'll also get that for $0. There's going to be no charge for it. Me and Mark have mentioned it here before. We're never going to come here and ask for money or start promoting products. So both of these things are absolutely $0. And me and Mark just wanted to give back. And this is one of the ways. And we would love to get feedback from you guys about this and the entertainment portion that you guys that we do, and then maybe in the comments or any feedback you guys have. Okay, let's get started.
Well, hold on before you start there, Mo. Guys, he's going to be giving out right now something free. Do me a favor. Click that like button, subscribe if you're brand new, but also share this real quick. And before you get into this, Mo, let me just remind everyone, this is the Come Up series. We are one of the shows on the Come Up series. Let me pull this up real quick. This is the lineup for 2023 so far. On Mondays, we got Lawrence and Tiara. I hope I said her name right for Monday Night Take. It used to have Lawrence and friends, but Tiara is definitely the co-host now. I heard him say it multiple times. My bad. Just need to update that. So my apologies, Tiara, that I always just called you a friend. It's their show together. Tuesday, you got Mark and Jolynn, Executive Education. And then on Wednesday, you got Christopher W. Bush and Abby for Red Line. And Thursdays is where you're going to chill, relax, come over and enjoy some entertainment / knowledge, where we talk about various different things, bullshit, but most importantly, we do give out some sort of value. So make sure you guys check that out. Also, next week, if you guys come in, max participation, we really appreciate it. You guys know I like books. I read. Let me pull in real quick on this one. I got a ton of books, like a lot. My latest book that I bought, I recommend everyone purchase it. It's the Tao of Warren Buffett. Have you seen this one, Mo?
No, man. I'm having a hard time finishing my books. I have like so much workload right now, which is an excuse, but I'm trying best to get back on reading books.
Yeah, this is more like a coffee table book. It's every day I open up. It's just like one little short chapter. I don't know if you can see it. My light is like really harsh over here, but it's just a page, like half a page a day, essentially. I read it to my kids and my daughter. Specifically, my daughter, she really likes the whole stock market stuff. So I usually read it to her. She's missing tonight, obviously, because I'm doing this podcast. But I read a page a day just to kind of get these different quotes and mentality that Warren Buffett has garnered throughout his, 120 years on this planet. But most importantly, I also have a bunch of books on a Kindle. If you ever get a chance to buy yourself a Kindle, if it's ever on sale, it's kind of expensive. I know this is not like the Kindle, the one that you can play like the iPad. This is strictly just books, and you can, I like it. It doesn't hurt your eyes as bad. And that's the reason why I bought it. Not necessary, but if you happen to come across it, I think it's a great little thing to have, a technology to have. But with that being said, the reason why I'm bringing this up, if you guys show up next week, please show up. I'm going to drop 2 books. I'm going to give you guys for free. You can attach it to your Kindle, or if you wanted to, you could drag and drop it into your iPad books, and it will pop up there too, covering everything. I'm going to drop 2 books next week. The books I'm going to drop is going to be, let's go with The Psychology of Money and The Compound Effect, because I always talk about the compound effect quite a bit, especially when it comes to vertical trading, which is I pretty much specialize in at this point. That's what I do. So, and I like the compound effect, small little increments. I think everyone should read that book. And of course, The Psychology of Money. I'm going to drop both of those next week for free. So make sure you stop by. Enough advertisement. Back to you, Mo.
Okay, let's get started. All right, can you make us smaller? Perfect. Thank you.
Do you want us to
This
completely
perfect.
get out the way? Oh, that's fine. Okay, perfect.
Yeah, perfect. Okay, so how to find an options trading A+ setup? It's for swing trading. I look for longer time frames. So if I'm telling you this is one of the key level example, and I'm telling you it's on a daily chart, don't be pulling it on a 5-minute chart, because then the strategy fails. It doesn't work. It only works for long-term chart. If you go weekly chart, that's fine, but don't go 5 minutes, 50. It doesn't work on short term. It's a swing trading strategy that I use for. Okay. All right. There's a reason why I came up with, and for the reason was personal. Then I told you guys I do a lot of one-on-ones. I do it for people that have never traded, people that have been trading, people that are senior 10, 15 years. And I do one-on-ones with them, and I write down stuff that keeps coming over and over again. So this process has been able to help me not overtrade. And you see a lot of people talk about this stuff, right? Oh, just take A+ setups, but no one really talks about what it is. And I covered it remotely in, I think, 2 weeks ago, but I'm like, okay, we need to go more in detail because these methods are objective. You don't need to buy anything from me or anyone else because they're not proprietary. Like, they're very objective. Whatever strategy you're using, you could just apply to it, right? It's that simple. So it helps with overtrading because if the trade doesn't match the system, you're not going to take it. And so it's not in your control. The system decides if you take the trade or not. There's no room for gut feeling, experience. My bro told me to take the trade, or someone who charges 15K told you. Like, there's none of that shit. It's objective. Okay. It makes sure people who are trading without a plan get overwhelmed because once they see those 4 pillars that I'm going to go over, they're not going to be able to take a trade because it doesn't match the system. The third is incorporates risk management in it. Instead of you taking something and then applying 5, 6 different strategies, you're just going through one strategy that takes care of every single thing. And then the last part is comparison, which is probably the most deadly one. There's no course for that. There's no training for that. It's more stuff, evil stuff that we've learned from the society. And I'd say parents too. The parents play a big part where, a lot of the stuff we learned has been inherited and most of it is toxic, right? So it takes care of that. It's very objective. It's very robotic. You start adding your own emotions to it, it's not going to work. Example, CLS. 1 week didn't work, people were complaining. 2 week didn't work, people were complaining. 3rd week, complain. 4th week, it's up 20%. That trade right now is up about 150%. You can go back, watch the video. These trades will take time, okay? And there's going to be triggers when you get out. So I'm going to go over the strategy now with you guys. Any point you have a question, you stop, we go over the question, and then we go move forward. I've dedicated about 30 minutes for this. Hopefully we get this done. If I can't answer all the questions, the e-guide that I'm going to post will be on the weekend because I need to add more stuff to it. But I've made especially for you guys. So let's get this started. Okay, so there's 4 pillars. I call these 4 pillars, and you have to follow this exactly. You start adding your own stuff, it's not going to work. You start using different time zone, it's not going to work. And I'll go over an example. I'm going to give out a play today. Okay, it's going to go over that. Cool, let's get started. First one is any trade that you take, you have to take it on a key support. I talk about this with everyone. That's my base rule. Like, this is just, how there's law of gravity. That's my base rule. If you're getting into a trade, breaking it down for you guys, if you're getting into a trade where you're in the middle of the range, so support's pretty far, resistance pretty far, you're in the middle, you do not take the trade. You either take the trade on support or resistance. For A+ setup, you take a trade at a key support. I'm going to give you some of the examples of key support. One of the example is taking a support on a daily 50-day moving average, okay? That's a key support. A lot of my trades are taken on daily 50 moving average, daily. Do not pull a 5-minute chart and throw a 50 MA and be like Mo said, let's do this. No, daily is the bare minimum, not hourly, not 15, not 30. You can go a higher time frame. I'm cool with that. The longer the time frame, the more trustworthy these levels are. So that's cool. You can take it on daily support and resistance. Daily support and resistance, not hourly. What's a daily support? You go on your chart, you pull daily time frame, and then you find a daily support. Or You can do it on daily supply and demand or hourly demand and supply. So for supply and demand, it's a lot more precise. You can use hourly time frame, which I use time to time. Is that clear? Anywhere not clear, let me know. Pillar number 2, the stop loss is close to an entry. What do I mean by that? Your friend calls out a trade, Apple 180 at $1, example. It's up 30%. You get in, you're break even because it's up 30%. The trade pulls back 30%. Your friend's at break even, but you're down minus 30%. Your friend's stop loss is negative 20. So if the trade doesn't work out, he loses 20, you lose 50%. So that's why the entry has to be precise. Because it's at key support, that's rule number 1. The stop loss should be closed. Can someone tell me why a stop loss should be close to entry? I'm going to move on, but think why. Why should a stop loss be close to entry? Okay, if someone can tell me that, we'll go cover more. I'll cover the next point, but think about why it should be close to entry. Point number 3, risk reward 1-to-1 or greater. I see so many people take trades where I'm like, you made money, but makes no sense of doing that. No sense. Because if you win, you make 20%. If you lose, you lose 80%. What's the point? Would you ever do that in real life in a business? You will never. Okay, I'm going to come back to my point. The reason why you take the stop loss close to entry is because if you're wrong, you're going to be out with a small loss. Exactly, Carrie. Exactly. You don't want to be taking big losses in options, especially if you have a small account. You're going to get wiped out. So your stop loss is very close to entry. Now, the reason why I tell you guys to longer time frame is because when we get into contracts, we're going to buy a lot of time. So when I gave you the Vail contract, it was out 3 months. When I gave you CLS, it was out 5 months. That's why. Okay. Risk reward 1 or more greater. Can someone tell me how to calculate risk or reward? And it's pretty simple. But meanwhile, as you guys are thinking, I'm going to tell you guys what I mean by 1-to-1. So what that means is if the trade works, so far, is everyone following? So if the trade works, you make a certain percent. If it doesn't work, it makes a certain percent. So you have a 80% probability of the trade working, but if you get stopped out, the level between the risk and reward are the same. Personally, I'm being completely honest with you guys. I do not touch a trade where the risk reward is less than 3-to-1, which means if I win, I make 300. I'm just giving you an example. Let's do this way. If I win, I make 80%. If I lose 20%. So if I get out of 4 trades, 1 trade right, it pays for the rest. That's how I think, and that's how I take trades. Now, this is not a secret. This is not a proprietary formula. This is different angles I've taken, and I've used them for the last 3 years. And I'm going to give out trades based on that. And if they don't work, I'm going to be out fast. But if they do work, you're going to make pretty solid money. I'll give you my data. Okay. Out of the, let's say 20 trades I've taken, the least amount of profit I made on them was 25%. The average profit was 80%. The most profit was 500%. So Carrie's asking, can you repeat pillar after stop loss close to entry? The third pillar is risk reward, minimum 1-to-1. I personally do not take anything less than 3-to-1, which means that I'll put it in a stock percent so you guys get an idea. If the trade works, I'll make 4% move on the stock. And if the trade doesn't work, I'm going to lose 1%. So I keep my losses small, but if it wins, make good money on it. All right. So is it possible for a stop loss to get triggered, but for some reason it doesn't execute? Well, yeah. So what happens is, and it's happened to me too. So let's say you get into a trade and you put a stop loss at, let's say 1, and your entry is 105. And let's say the stock starts going down and the premium is going 104, 103, 102, and all of a sudden it skips 1, and then you go straight to 98, and that can happen. But yeah, if you can find a trade with 12-to-1 risk reward, man, I take that every single time. I've never been able to find anything like that, but follow your strategy if it works. The last one is something that I added last month, and it's called follow the trend. And I'm going to tell you the reason for that. But let me explain you. If the long-term trend for the chart is bullish, but the short-term trend is bearish, you can take puts. They're a little bit risky, but you want to try not taking on a clear downtrend. For example, I'll give you a perfect Pfizer. I took that trade, got kicked out. Pfizer was going down, and I took the trade. I knew it was an A+ setup. I knew it was counter trading. And the reason for that was I thought it's going to bounce off from a key support. But what you're really saying, and think about this, you're telling the market that you will time a bottom or the top perfectly on a trade. Just saying that sounds silly, right? How hard is it for someone, forget me, even the best traders of the world, to say that they're going to get into a trade, swing trade a month or two out, and they're going to cash the bottom perfectly? It's almost impossible. And I do that. I have a still good success rate, but just saying that sounded bad. So I'm like, that if it sounds bad, why am I including that in my best setup? So I took that out. So Erica, you're asking trend on what time frame? It depends on the option you're picking, but I would say look at hourly and look at daily. If the daily and the hourly are disagreeing with each other, meaning if the daily is let's say uptrend and hourly is downtrend, and you are playing downtrend, it's fine, but you have to be careful because you still always have to respect the longer time frame. All right, I'm not going to go over individual stocks here, but let me see what this question is. Do you ever pick levels for a stop loss to cater for stop loss hunters, or do you go with a hard and fast percentage? So you should never go for a fast percentage like 20%, maybe stop loss or profit taking, because you don't know what the market's going to do. And that 20% doesn't care about you, right? Because that has no relevancy with the market. We operate on ranges. I would say majority of the traders that I talk, they go swear and die by support and resistance. The problem with that is market doesn't trade on a single point. It trades in ranges. So I'll give you an example. Let's say I put a stop on a trade at 20.34. Give you an example, just 20.34. And it gets to 20.34, but I'm only down, let's say 6%. What that tells me is that people that are in it haven't sold it and more people are buying it. I matched that with the flow. So there's been times where I've not respected my flow, my stop loss, because looking at the premium, it wasn't going down, it was holding strong. I think that's sometimes you have to use your judgment there, but there should be like a limit stop in the sense where that's the most you can lose. And I have that at 50% usually. All right. The last part to do is make sure you add flow to the mix. Personally, I don't take a trade with no flow. If there's no flow, I'm not touching it. Because I used to do that a lot 2 years ago. And I would say like, I'll get in and the flow will follow. I just feel like now looking back, I just sound cocky. Like I was doing a live too. And one of the things I realized, and that's what I wanted to voice out, a lot of trainers, coaches, traders come across like they know everything. They talk like a guru. They've never lost anything. And the people following are like, am I the only one that's losing money? Like I left a big essay to my team yesterday saying that I'm not comfortable trading in this market. And to be transparent, if I'm not comfortable, I'm not putting my money. So I'm just going to chill. What's the point of going to the war if you're not ready? And that's what trading is. You saying you've never lost tells me you're not transparent and you're not humble, and market humbles people like that. So either people are paper trading or they've never traded with big size or traded in these markets. So that's why these things are as good as your own emotions. If you're not doing this robotically, meaning to the T, I'm going to go over more example of what counter trading looks like. We're going to go over trading view and maybe do 1 or 2 trades. Okay. I'm going to give you the tools now. I'm not trying to sell you anything. I have no affiliation with any of them. That's why I'm not posting any links. You do what you want to. Sign up, not sign up. It's up to you. For Flow, I'm personally using TradyTix. I'll show you how my bot works. You can use Unusual Flow or Black Box Stocks. I believe all of them have free free features. So basically, they'll give you Flow, but it's like delayed. I don't know how much it's delayed by because I've always used the paid version. But you can do whatever you want with that.
Hey, Bo,
Apart from that,
just go ahead. Ignore the questions. We'll pull them up at the end. That way you can get through the brief without people asking questions as you're teaching.
Okay, fair enough. So I've always paid for it, so I don't really know how delayed they are. But it's usually 1 to 2 hours, depending on what platform you sign up for. I think Unusual Flow could be around 25 last time I checked, so it's cheap. I pay too much because I have my own Discord. You don't have to pay 250, 300. This for risks reward, I'll show you what I use. I use TradingView. It's pretty simple. The basic formula of risk is what? And stop loss minus entry, or entry minus stop loss. So here's your entry, here's your stop loss. That's your risk. What's reward? It's profit taking, where you want to take profit, minus your entry. It's very simple. And then you divide reward plus the risk. You get a ratio. This will all be in the ebook, so don't worry. Third is key level. There's some examples which I went over. Moving average is 50, 100, 200. Those are the key ones that I look for. Supply and demand is hourly, daily demand and support. Now, here's my scary part. I think majority of the people don't know how to draw support and resistance. So I have put in daily and hourly here, but I would recommend that most people just stick to daily, because if you draw the wrong hourly, you're going to get kicked out and you're going to be saying that, Mo, what the hell is you telling me this has a high success rate? So stick with hourly. But I will tell you in good conscience, market doesn't move on single points. They move in ranges, which is why supply and demand is far superior. There's people that use support and resistance and they make far more than me. I'm just telling you what works for me in the most humble way possible. For follow the trend, I use Fibonacci retracement. I'm going to show you, or you could use a simple trend line, but I don't have time to teach you an entire indicator. So we'll show you a couple of things. So let's take an example, and then if there's more questions, we can answer it. So the play that I'm going to go over is AR, ticker symbol AR. I saw Flow in it, and I'll show you how I search for Flow. So what I do is I search for AR here. Can they see it? No, hold on. Give me a second. Can you guys see this?
Yep, we got it.
Okay.
That's the Discord.
Okay, so basically you can go on the bots, but just to keep things simple, I'm going to search AR here. That's what I did. And basically this is what it showed up. So it showed up 3 sweeps. One was AR 29, 119, 2024, 281. This came today. The other one was 266K. And then the third one was, I can't find it. Sometime it gets, they have to go on different pages, but it's about roughly 900K for this chain. Now we're going to go over the chart and talk about pretty much what we're looking at. So can someone tell me what this chart pattern is?
You don't have the charts up.
Oh man, sorry, hold on. So this is the chart. Can someone tell me what this chart pattern is on daily for AR? Meanwhile, I'm going to add my moving average. So we're going to do...
Throw it in the chat, y'all.
Yeah, it's cup and handle. This is my favorite chart pattern. So let's do... So you guys get this. So let's just do support and resistance. I'm not going to do supply and demand because I don't want to confuse people. Okay.
So real quick though, Mo, is the cup and handle a bullish move or a bearish move?
Give me a second. Go through it. Okay, so this is my, okay, so Mark's question. So cup and handle is a bullish move. Basically what we're looking for is a cup. We have it, we have a retracement, and then we get a pump. This pump can go anywhere from like a 200 or a 300% move, but I'm in 29. My goal is to get to $29 for this. At $29, this is going to be up around roughly 150%. I think the stock has a lot of gas. So let's clear everything. Let's go over first thing first. Here's my entry somewhere around here. My stop loss is roughly 2677, I think. The 50-day moving average on this is at 2585. I don't think I'm gonna hold it for that long because that's pretty far. So I'm keeping this as my stop, 2677. That's my key level daily support. Let's take a look at the chart. Like, so long term, this is a downtrend, but short term, I was telling you guys, this is an uptrend. Where did it start uptrending? From 26th of May. So it didn't start uptrending last week. So we have data that supports that the buyers have been buying this for May, June, July, August, September. So if I show you guys, this is what I meant. Like, you have to, this is where you have to kind of use your judgment. Sorry for my horrible. I like to clear the chart a lot when I'm teaching. Call it OCD, but I'm just trying to show people one thing at a time. So this, not the perfect channel, but this is a channel. We would like to see a better channel, but it is what it is. This is the channel we're in. This stock was $50. Right now it's at 26. Let me show you something else. This is called Fibonacci. I'm not teaching this today, but I'm going to show you something. This chart at 0.76 level here, and it's looking like it's going to break out. I'm going to show you different patterns. I'm going to hopefully you get it. What you're seeing here is a tight consolidation. This breaks out all the way till 31, but 30 needs to clear. I expect the stock to really, really go crazy. What else do you guys see here? There's a lot of bullish patterns happening here. There's a bull flag. There's a cup and handle. There's so much going on. There's 900K on that. So if we go through our A plus setup quickly again, flow, 900K. Is that a lot? Yes, it's a lot for that ticker. Doesn't usually see that much flow. Apart from this first week of September, they also bought October calls. They're still in those call. Risk reward on this. Let's go take a look. So let's go hourly for here. My entry was somewhere around, is it hourly? Yeah. Was somewhere around here. So I'm just going to assume my entries here, and our stop loss was 2677. I think, give or take, that's where I was. So that's my stop. My profit taking on this thing is 29. So I'm going to show you guys. Okay, I'm going to just read it out for people that can't see it. So if the trade doesn't work, we are going to lose 2% on the stock, because that's how we can do it on TradingView. If the trade work, we're going to make about 6% on it. Someone tell me what the risk reward is. If it goes down, you lose 2%. If we go up, it's 6%. Tell me what the risk reward on this is. Okay, I'll wait for you guys to answer. Meanwhile, we'll see what else is left. Key level, done. Follow the trend, done. Okay, I haven't gotten any answer. What's the delay like on YouTube?
It's delayed a little bit. It's delayed like about 10 seconds, it seems like. So
wow. Okay.
3-1.
Yeah, that's the risk word. So this sums up my training. Mark's going to drop a link. It's going to be once the training is posted, this video is posted, and I'm going to have examples of how to calculate risk and reward and all this information in a written format. With that, I'm done. I'm gonna see if there's any questions that we didn't answer.
All right, guys. Yeah, if you want to throw out the questions now, go ahead, throw them out. Let me see. Let me scroll up in case we miss it. Do you? What's this? Do you ever pick double stop losses? I think we already answered this one. Did you answer this one?
Which one? Do you pick levels for a stop loss to cater for? No, so I don't really care about stop loss hunters because I don't pick a single level. So when I say 2677, I'm not relying on, like, if it hits 26, I'm not selling it right there. I might get out at 2650. I'm looking at how the premium's moving, how much down I am, like all those factors I look for it. And again, you guys have till January. So you have about 2.5 months. This isn't something where you're getting nervous or anxious. It's pretty chilled out play. How do you find out the flow? I just went over it. I have bots in my Discord. Plus, I'm signed up with TradyTix, but there's a lot of free softwares you can use. They're delayed. I can't afford having a delay. I need to make the action fast, so I use live data.
Yeah, to trend on what time frame you're looking. If you look on the top left-hand corner, there's your
Trend on what time frame? So, like
left.
I said, I look for daily time frame, but if the short-term time frame, in this case, we started uptrending here in May, so that's good. That's perfect. But if the trend changed last week, that's not good.
All right. Is there any other questions?
Yeah, Marcel has a question. How do you determine the entry point? Entry point was that a demand zone? So basically, the way I entered this, the moment I saw the flow, I quickly did everything I told you in like less than 60 seconds and made the call to get in the trade. But if we were to look at this on a 30-minute, the entry would have been at 2677, but I don't think we retest 2677 because there's 900K that time right away. I had to make a decision if I was going to get in or not. So I made the call.
Okay. And that was also your pick that you were going to talk about was AR, right? The one that
Yes.
you were working on. That's the one you're talking about. All right. So is there any other questions I missed as I was producing? Is it possible? Nope. These, I think we should be good. I think so. Let's double check. Just give it like a few more seconds. But all right. If there's no further questions, we'll let it play out real quick and see if there's any further questions. But in the meantime, again, Mo, where can they find you?
You guys can find me on Instagram at OTB Clubhouse.
Okay, and then this description below, if you look in the description of this episode, we have the link that I posted for Mo in there as well. And unfortunately, I cannot post the link that I posted for this cybersecurity because I already went live. Maybe I can. Let me double check. I will try. If not, so remember, go back, watch the video, or go look at the pinned comment here in the chat if you want to sign up for the free cybersecurity. And like I said, next week, I'll give out 2 free books. And then the week after that, I will not be here. Hold on. Let's see. What kind of call you take for AR?
So I want to be very careful. I took what the flow came in, but use your own discretion. This is by no means any financial advice. The flow came for AR 29 strike price for January 19, 2024.
Yeah, you guys make sure you do your own due diligence. And remember your own risk to reward. And because I know I got a comment last week when they were saying, "Hey, tell people how many shares I'm buying in my dividend portfolio." Again, it just varies. I cannot. Don't follow me. If I buy 100 shares, maybe you can't afford 100. Maybe you can afford more than 100. It's up to your discretion. You got to do your own due diligence. You can't just follow me. I put the ticker symbols out there that I'm investing into, and like I said, it was my change portfolio, meaning that if I have $20 here, I put there $50 here. So I don't necessarily buy full shares. It just depends. If I have some spare cash, I'll throw it in there. But it's up to you. Any person you listen to, any trader, any financial advisor, their portfolio is not your portfolio. So you can't expect them to necessarily tell you how many shares you should buy, how many contracts you should buy, what strike you are picking, because your tolerance may be different than the other individual. My tolerance isn't the same like Mo's, and Mo's tolerance is way higher than mine. So let me see. One more question here. Oh, wait, hold on. I missed one here.
So I pretty much went through the whole thing, man. Like,
yeah, just rewatch it. Just rewatch the video for sure.
Yeah.
And then what's this level? What y'all think about the ARM IPO? Not keeping track of that one.
It's basically all the chips and everything.
Oh, yep. That's it. All right. Cool. Anything else, Mo?
I will say that, I get a lot of DMs, and I just want to say that I noticed that a lot of people they need, like, what they need is to learn the process, but what they're really focused on is the execution. Meaning they're looking for me to give out plays, but they have no clue how to follow the process, which is why I did this. But I would say invest in yourself, learn it, like, because I like see these DMs and I'm like, if you really think that Mark or even I just learned this on our own, you're giving me way too much credit. Mark, I'm doing a 1 week training this week. I haven't told you about. It's a paid training. And almost every month I allot a budget of how much money I'm going to spend. This is nothing to do with trading. It's on just business acumen and just my own self-growth. People need to learn like how to do this on your own. And this was all this training was about. Nowhere was a secret given. No, nothing here was proprietary. This is open information. It's sort of like I'm giving you a recipe on how to make something. You probably already know what the ingredients are. I'm just telling you how much quantity to put in everything. That's all I'm doing. But if you can't invest any money right now, I would say go on YouTube and learn, take the podcast, watch all the stuff that we post. But I would say stay away from just taking plays from other people, because that's very scary. Like, I had a conversation with Mark, and I think we talked about it too. Like, someone basically got in, said, Mo, what are the plays? I'm like, did you go over the courses? They're like, no, I haven't gone over the courses because I don't have time. And I'm like, you don't have time to go over courses, but you have time to trade. You got to change that mindset. It really worries me when I talk to people. And I know, like, cousins, everyone associated with podcasts, you guys are all about learning. But again, there's new people joining. I just want to warn, like, be it me, be it Mark Monroe, just don't take anyone's play blindly. Because if you don't know how to execute, you have no clue why they got in the trade, you're going to get shaken out.
Absolutely. And one person asked, oh, no, someone was saying they're still struggling. Yep. It's a process. There's a struggle. I'm wrapping up my 3-year journey, almost here soon. Took some losses, took some wins, took some losses, took some wins. It takes time. I could tell you this, that almost 90% of everyone I started with back in 2000, they're not doing this anymore. They lost a lot of money, or they are not in the right mental health space, because the space can be extremely negative. It's a lot of ups and downs. It takes a lot. And a lot of people were trading money they shouldn't have traded because they didn't have it. Someone asked, who is it? Are you talking about me? Hold on. Someone asked who the guy is that's monitoring. Yeah, my name is Mark. So you can find me on YouTube at Half-Breed Observer. That's my political satire channel. And then I have Uncultured Currency, where you can follow me for the past, I guess, 2.5 years, trying to become a full-time investor and trader, and the things I've learned on the process while I was going through that, as well as a lot more. I'm in there. But yeah, that's pretty much it on my end. Mo, again, tell people where they can find you.
So if you guys are following my trading journey, just follow me on OTB Clubhouse. And I'll start my YouTube channel with Mark's help. Hopefully this Sunday I'll be on.
Yeah, you got to, man. I'm telling you, you'll benefit from it for sure. So, all right. That's pretty much it, guys. I am going to watch something real fast before I go to bed. That's the only time I get to catch and watch some TV. By the way, everyone, I know some of you know that even Mark Monroe, they're in Lawrence, I think they're heavy into like WWE. I do watch it occasionally with my kids. I'm more into like the documentaries, but Netflix has this new show. It's a documentary called The Wrestlers. Really good. Watch it. I binged the shit out of it for like 8 hours the past 2 days. I loved it. I love seeing the backstage and the business side of things, and it follows old school wrestler Al Snow and this other business people who came in and try to help get this business out of financial ruin, aka OVW was the name of the company. Really good documentary. So even if you're not in wrestling, you might just like it because it's a good documentary and it deals with business as well. So and thank you guys, seriously, everyone. Thank you for stopping by as usual. We had record numbers, I think, this time, right?
Mark, can we quickly do one thing? And I'll
Sure,
promise
man.
we'll be under 60s. Okay, so I promise people I would go over 0-day trades for tomorrow, and I just want to.
Oh yeah, the Lotto Fridays. Okay, again,
can you add me, bro? How do I add my chart? Did I get kicked out? Do I have to share my screen again?
Here you go.
Okay, perfect.
I don't know why.
Wait.
I'm gonna put it full screen.
Cool. Let's quickly go over 2 trades I'm watching for tomorrow. I think the biggest thing that happened this week was bears were taken out, and that was my biggest trade. That's what I've been just chilling, telling people I'm watching, not into puts yet. So the trade that I'm watching is Tesla. I like the 280 contracts. They were about $1.20. I took some, and it was a lot of like if market. I think we could get a gap up, but 280s look really good. If you can somehow, let's say we get a dip to 275, if you can get 277.5, they'd be better, because oftentimes they don't get to 280 till the end of the day or till the number, and then you get basically grinded out. If we gap up, there's no point looking at it, because then I'll be in the money, and those will open around $3 from $1.20. But I like 280 for tomorrow. If you can get the 277.5 for cheaper, they're better. But let me show you guys something on an hourly chart on Tesla. If you guys look at how it's been moving, the dip keeps getting bought, the deep, like multiple times, and they basically, we only saw 2 candles underneath this, but 270.20 held. I don't think we see 270 tomorrow. I think there's going to be a lot of buying tomorrow. That's Tesla. My other trade I like is NVIDIA. Look, everything jumped off except this, and this was part of ARM. So I don't know if this is part of rebalancing. This is why quad witching is scary. But if you guys look at it, like tight consolidation, it's at 455. I like 460 calls for it tomorrow. With that, I'm out. Yeah, that's it. I don't want to go over more trades.
It's funny. Like when he asked for ARM, I used to keep up on all the chip sector, but since they ran these past 6 months, I don't even keep it up. I don't keep up anymore. I'm more upset the fact that I sold NVIDIA way too early. All right, y'all. Thank you so much for tuning in. Of course, once again, see us next week. Come for the free books. Mo's going to drop some more gems. And as usual, hopefully you enjoyed this episode. Give us some feedback, and hopefully you didn't trigger nobody. Until next time, peace out.
That's 100.